What most YouTubers or social media trading gurus won't tell you is how they get to their price prediction figures for any given stock or crypto. And the reason they don't do that is usually because they want to paint a picture which is oversimplified and easier than reality. For example, in the case of VeChain, I've seen a number of price predictions for VET of over $100 per unit. Now, nobody really talks about what would have to happen in order for a price prediction like that to be realized, and the truth is a market price of any crypto project is always behind the real value and performance of the underlying operation, which means that for VET to sustainably reach a value of $100 per unit, not just in a one-time bull run where the price reaches that level for an hour and then crashes back down, but to sustainably reach that level of value, the VeChain platform would have to reflect a value through performance of $8.6 trillion, accounting for the maximum supply of VET. Now, to put that figure into perspective, for VET to reach $100 per unit, the market capitalization of VET would have to reach a figure which is larger than the combined market capitalizations of Apple, Tesla, Amazon, Microsoft, and Alphabet. And call me skeptical, and while I do believe in the long-term prospects of VET, for the foreseeable future $100 per unit is simply out of the question. But remember that $100 is a long way away, and even if the price of VET were to reach just $1 per unit, we're talking a gain of 12 to 1. Meaning that an investment of $8,500 today would be worth $100,000 at $1 per unit. And for the market price to reach $1 per unit, we'd need a market capitalization of $86 billion at full dilution, which is still a high figure, but it's far more reasonable than $8 trillion, and in my view it's realistic for the foreseeable future as well. And remember that the underlying business must first produce results worthwhile for the price to then follow, if we're talking about sustainable price rises and not just one-time rallies. And so what would make VeChain worth $86 billion? The answer is, in my view, earning power. Companies, including many of the biggest in the world, are already paying to use VeChain services, and they are paying for that using vethor. And so the way to measure the earning power of VeChain is, in my view, to measure the annual total output of vethor from the VET dividends. And hey, if you're enjoying this video so far and you're a VET investor or just a fan, we have a lot more content like this out daily, so do me a favor and subscribe for those. Of course, the market value of both VET and vethor is constantly fluctuating, which makes it hard to pin down an exact value. But right now, the monthly vethor dividend across all of the VET in existence is around $18 million, which means that the whole dividend worth is around $216 million annually. And if we were to then divide this $216 million figure by the $7.3 billion market capitalization, we arrive at a dividend yield of around 3% per year. Which isn't a huge figure, but actually when we compare it to the available alternatives, for example the S&P 500 which yields around 1.5%, or a regular savings account which offers effectively nothing or next to nothing, 3% per year isn't that bad. But remember that the $216 million figure represents 3% per year at current levels, but VeChain is a rapidly growing platform and the list of partners is growing pretty much all of the time, which means that the genuine usage and demand of vethor is growing at a fairly quick pace as well. Although again, it is hard to tell exactly what percentage is genuine and what percentage is speculation or investment into vethor. And if VET is yielding a 3% dividend value at a market capitalization of $7.3 billion, we'd need a growth of 14 to 1 in the volume of genuine use which VeChain attracts and therefore in the demand for vethor. And by the way, the reason as to why I think that this is more than achievable is fairly simple. VeChain started up in 2015, around 6 years ago, and since then, considering that much of that time was probably spent in development, VeChain have grown from zero to an annual vethor dividend of around $216 million by my calculation. And to grow by a factor of 14 to 1 from here won't be an easy thing to do by any measure, but it's more than possible as the current level of VeChain adoption is barely the tip of the iceberg in terms of market share and adoption. Barely a few percent of businesses who VeChain could partner with have even heard about the platform, and even then most probably aren't aware of the immense capabilities. And so I think that there is a long way to go, and if the future level of growth and adoption of VeChain is even a fraction of what it has been over the last 5 years, then I think that VeChain are well on track to generating that $3 billion annual dividend, which would give a market valuation of $1 per unit based upon the dividend value alone, not even considering speculation or reinvestment or anything else like that. Anyway, hopefully this analysis has been a bit more rational and data-driven than the normal shouting and screaming of ridiculous price predictions online. And hopefully you guys enjoyed the video, and if you did, consider subscribing for more content like this. See you all in the next video.